You know, it seems like every time you turn around these days, there's another headline about tariffs, right?
It's definitely been a hot topic.
It can be tough to really grasp, what it all means, especially for folks like, our listeners who are trying to figure out, like, okay, when's the best time to buy that new laptop or snag a deal on a new phone?
Yeah.
When you're bombarded with all this news about trade wars and, percentages, it can feel pretty overwhelming.
Yeah, it definitely can. And it's tricky because like the average person trying to make a purchasing decision isn't necessarily thinking about like, global macroeconomic trends.
Right.
But those things are actually connected to the price tag you see at Best Buy or when you're shopping online.
And that is exactly the connection we're going to try to make today in this deep dive. We want to look beyond just those, those big, scary headlines and really get into like the nitty-gritty of how these recent and proposed tariffs might actually affect, your wallet and the tech world in general.
Yeah, exactly.
And, speaking of those scary headlines, we are talking about, some pretty significant numbers here. Like the article you flagged mentions a 20% tariff on some goods from China.
Yeah.
Certain products from Canada. And then, get this, a full 25% tariff on all steel and aluminum imports.
Those are some big numbers.
Yeah. And we're not talking like, luxury items here. This is stuff that affects like everyday tech products,
It's really across the board.
So today we're going to break it all down. We'll start by, mapping out the timeline of how these tariffs have been rolled out. Then we'll look at the immediate impact on prices, what you can expect to see in the coming weeks and months. Then we'll zoom out and discuss the bigger picture implications for the tech industry as a whole, things like supply chains and manufacturing. And of course, we'll wrap up by talking about what all of this could mean for you, the consumer. How can you navigate this new landscape and make informed purchasing decisions?
Sounds like a plan.
All right, so let's get into it. First things first, these tariffs themselves. The article lays out a pretty specific timeline of how they've been implemented. Can you walk us through that?
Absolutely. So going back to the beginning, the initial announcement for these tariffs, targeting goods from China specifically, that was made on February 1st.
February 1st?
Yeah, so right at the start of the year.
Okay.
And then things moved pretty quickly, actually. The tariffs actually went into effect just a few days later on February 4th, starting at a rate of 10%.
10%. Okay, so that's kind of like the opening salvo, right?
Exactly. Yeah, it's like, setting the stage.
And then what happened?
Well, it didn't stay at 10% for very long. By February 27th, there was already talk of increasing those tariffs on Chinese goods.
Oh, wow. So less than a month later?
Yeah, it was a pretty quick escalation.
Yeah.
And sure enough, on March 4th, those tariffs on Chinese imports jumped up to 20%.
So that's a pretty significant increase in a really short amount of time.
Yeah, it's definitely a big jump. And it's not just about China either. On March 12th, the U.S. also implemented a 25% tariff on all steel and aluminum imports.
Oh, wow. So this is like a separate but kind of parallel track?
Right, exactly. Yeah. It's important to keep in mind that this 25% tariff on steel and aluminum, that was a blanket measure.
Yeah.
No exemptions.
No exemptions at all.
Nope. It applied to all imports of those materials, regardless of where they came from.
Okay. And just to clarify, this also included an increase on the aluminum tariff specifically, right? Because previously it was at 10%, and now it's up to that same 25%.
That's correct.
Yeah.
So aluminum got hit with a pretty substantial increase, and this is all happening, within just a couple of months.
It's a lot to keep track of. And it doesn't sound like this is the end of the story either. The article mentions that the U.S. is still considering additional tariff increases.
Yeah, the situation is definitely still fluid.
Yeah.
One example that really stands out is that in mid-February, President Trump suggested a 25% tariff, specifically targeting semiconductors.
Semiconductors now, those are like the essential building blocks for so much of our technology, right?
Absolutely. Everything from smartphones and laptops to cars and even, household appliances rely on semiconductors.
So a tariff on those could have really wide-ranging effects.
Oh, yeah, for sure.
Yeah.
And what's even more concerning is that the article mentions the possibility that these tariff rates could continue to climb even higher over time.
So it's not just a one-time adjustment. We could be looking at, a constantly shifting landscape.
It's a lot of uncertainty. And to make things even more complicated, we have to consider the possibility of these tariffs stacking on top of each other.
Oh, yeah. The article calls this cumulative tariffs, right?
Exactly. So, for example, if those steel and aluminum tariffs are applied to products that are already subject to the tariffs on goods from China, well, you could end up with a total tax of 45% on those items.
45%? That's almost half the value of the product just added on in taxes.
A massive increase.
Yeah.
And that really highlights the potential impact on prices,
Mm.
which is, what we're going to talk about next.
Right, because ultimately this all boils down to how much you and I are going to end up paying for our tech, right?
Exactly. These tariffs aren't just abstract numbers. They have real-world consequences for consumers.
So let's talk about those consequences. The article points out a pretty important distinction between profit margins in the tech hardware industry compared to, say, the software industry. Can you explain why that's relevant here?
Sure. So think about it this way. Companies that make tech hardware, things like laptops and phones, they typically operate on pretty thin profit margins. The article mentions a range of somewhere between 6% and 15%.
Okay, so not a ton of wiggle room.
No, not really.
Yeah.
Now, compare that to the software industry where profit margins can be significantly higher. Sometimes upwards of 70% or even 80%.
Wow, that's a huge difference.
It is. And this is crucial because when you slap a tariff on goods imported from China, which is where a lot of this tech hardware is manufactured, it means those tech hardware companies have a lot less room to absorb those increased costs.
They can't just eat the cost, so to speak.
Yeah, right, exactly. Those tariffs take a much bigger bite out of their already thin profits compared to, a software company that has a much larger cushion.
And we're already seeing some real-world examples of how this is playing out. The article mentions some announcements from major retailers.
Yeah, retailers like Best Buy and Target have come out and said that they're expecting to have to raise prices because of these tariffs.
So it's not just hypothetical. This is already happening.
It's very real.
Oh.
And it's a clear indication that these tariffs are going to have a direct impact on consumers' wallets.
So what's the takeaway here? Should people just brace themselves for higher prices across the board?
Well, it's not quite that simple. The article actually points out a potential silver lining here, at least in the short term.
Oh, really?
Yeah, so there's a chance that you might be able to find some devices at lower prices right now because some retailers might still be selling inventory that they imported before these tariffs went into effect.
So they're still selling stuff at the pre-tariff price.
Exactly. Or they might be selling stuff that was priced based on that initial 10% tariff rate.
Makes sense. So it's kind of a race against time.
In a way, yeah. If you're in the market for some new tech,
Yeah.
it might be worth shopping around now and seeing if you can find any deals before those prices inevitably go up.
So that's good news for some folks. But the article also makes it clear that the speed at which those prices increase is going to vary depending on the product, right?
Yeah, that's right. Products that are in high demand and are frequently imported from China, those are going to see price hikes a lot faster.
Because retailers are constantly having to replenish their stock.
Exactly. They'll be buying new inventory at the higher price, so they'll have to adjust their prices accordingly.
Whereas something that maybe isn't as popular or maybe they have a big stockpile of already, they might be able to hold off on raising prices for a bit longer.
That's the idea. So it's not going to be like a uniform price increase across the board. It'll be more nuanced than that.
Okay, so that's something to keep in mind. All right, so we've talked about the timeline of these tariffs and the immediate impact on prices. Now let's zoom out a bit and talk about the bigger picture implications for the tech industry as a whole. The article draws an interesting contrast between these tariffs and the tariffs that were implemented during the previous administration.
Yeah, it's an important distinction. You see, the tariffs that we've seen in the past, they tended to be more targeted. They might focus on specific industries or even specific companies.
Okay, so more of a surgical approach.
Right, but these new tariffs on imports from China, these are much broader in scope.
It's more like using a sledgehammer?
Yeah, kind of.
Yeah.
And that has big implications for the tech sector because China has become such a dominant player in the global electronics supply chain.
It's the world's factory, right?
Exactly. So this isn't just about a handful of niche products.
Yeah.
This is about everything from laptops to smartphones to printers to even those little accessories like power adapters and cables.
If it's made in China, it's likely to be affected.
That's the key takeaway. As you can imagine, this has prompted a lot of companies to start looking for ways to diversify their manufacturing operations.
Shift production to other countries, things like that.
Yeah, exactly.
Yeah.
The article mentions Vietnam and India as potential alternatives.
Right. Places with lower labor costs.
Exactly. However, there's a catch. Shifting production isn't as easy as it sounds. It's a complex and time-consuming process.
These factories don't just pop up overnight, right?
No, it takes time to build the necessary infrastructure and train the workforce. Depending on the product, we could be talking months, if not years, before companies are able to make a significant shift.
So in the meantime, they're kind of stuck.
To a certain extent, yeah. They have to deal with the immediate realities of these tariffs while also trying to plan for the long term.
And that leads to one of the overarching themes of the article, which is uncertainty.
Yeah, this sense of not knowing what's going to happen next, it's making it really difficult for businesses to plan and make strategic decisions.
Because, the rules of the game could change at any moment.
Exactly. And that's why tariffs continue to be such a hot topic in the news. Everyone's trying to figure out what the next move is going to be.
And it's not just the uncertainty about, future tariff increases. There's also the issue of how these tariffs are actually paid.
Right. You see, companies have to pay these tariffs up front.
It's not like they can just, put it on layaway.
No, it's an immediate cost that they have to factor in.
So even if they're planning to shift production down the line, they still have to deal with these tariffs in the short term.
It adds a whole new layer of complexity to their operations. The article talks about how there's a lot of discussion happening right now within the tech industry, between manufacturers and distributors and retailers.
Everyone's trying to figure out how to adapt.
Exactly. But the problem is that any solutions they come up with are only as good as the current policy landscape.
So if the government decides to change course, well, all those plans could be thrown out the window.
Yeah, it's a very fluid situation. So the key takeaway here is that we should expect continued volatility when it comes to tech prices.
It's not going to be a smooth ride.
No, definitely not. And the article even suggests that we might actually see some price decreases at some point.
Oh, really? Now that's counterintuitive.
It is. But think about it this way. If tariffs were to suddenly be removed, well, the cost of importing those goods would go down. But that doesn't necessarily translate into an immediate price drop for consumers.
Because retailers might still have inventory that they bought at the higher price.
Exactly. And they're going to want to sell that inventory before they start lowering prices.
So it could be a while before we see any real savings.
It's a gradual process. And it also depends on the overall stability of U.S. fiscal policy. If there's a lot of uncertainty about future trade policies, well, companies might be hesitant to lower prices too quickly.
They don't want to get caught off guard.
Right, they want to be cautious.
Okay, so tariffs, prices, uncertainty, it's all connected. But the article also makes it clear that the impact of these tariffs extends beyond the U.S., right?
Absolutely. We live in a globalized economy, so what happens in one country can have ripple effects around the world.
And these tariffs are no exception.
Not at all. The article gives a really good example to illustrate this. It talks about a Canadian consumer buying a product from a U.S.-based fulfillment center.
Okay, so someone in Canada buying something online from a U.S. company.
Exactly. Now, even though that consumer is in Canada, they could still end up paying more for that product because of U.S. tariffs on Chinese imports.
Because the U.S. company had to pay those tariffs when they imported the product.
Right. So even though the transaction is happening outside the U.S., those tariffs can still have an indirect impact on consumers in other countries.
It's a reminder of how interconnected the global economy really is. And when you consider that most major tech companies operate on a global scale, well, it's clear that these increased costs are going to have to be accounted for somehow.
Yeah, whether it's through slightly higher prices in other markets or adjustments to product availability, those effects are going to be felt worldwide.
So tariffs aren't just an American issue, it's a global issue.
It really is.
All right, so we've talked about tariffs, prices, uncertainty, global impact. Now let's talk about how all of this might change the way we think about consumer pricing and product availability. The article makes an interesting point about manufacturer-suggested retail prices, or MSRPs.
Yeah, MSRPs are those prices that you often see listed next to products, online or in catalogs.
The price that the manufacturer recommends that retailers sell the product for.
Right. And traditionally, MSRPs have been a pretty reliable indicator of, what you can expect to pay for a product.
Give or take a few bucks.
Right. But the article suggests that in this new environment of fluctuating costs and potential supply chain disruptions, MSRPs might become less meaningful.
Because the price that the manufacturer suggests might not reflect the actual cost that the retailer has to pay to get that product on the shelf.
Exactly. If a manufacturer is facing higher costs because of tariffs, they might try to absorb some of those costs themselves.
Take a hit to their profit margin.
Right. Or they might try to pass those costs along to the retailer.
Which would then get passed along to the consumer.
Exactly. And then there's also the possibility that manufacturers might decide to limit the availability of certain products if the cost of producing them becomes too high.
So instead of raising the price, they just make fewer of them.
Yeah, that's another strategy.
Yeah.
And either way, it puts upward pressure on prices.
It's a seller's market.
To a certain extent, yeah.
Yeah.
And the article also highlights the concern within the industry about potentially getting stuck with excess inventory.
If they make too many products and then demand drops because prices are too high.
Right. That would be a big problem for companies, both logistically and financially.
And on top of all of that, companies are also having to deal with the increased operational burden of trying to navigate all these new rules and regulations.
Absolutely. Understanding new customs procedures,
Yeah.
making sure they're classifying their products correctly,
Mhm.
staying on top of any changes to trade policy, all of that takes time and resources.
It's a lot to juggle.
It really is.
Mm.
The article uses the example of a new GPU launch to illustrate how all of this can play out in the real world.
GPUs, those are the graphics cards that power, gaming PCs and stuff, right?
Exactly. So let's say a company like NVIDIA or AMD releases a new GPU, and they set the MSRP at $200.
Okay.
Now, because of these tariffs and the increased costs that their partners are facing, the actual price that you see at retail could end up being significantly higher than that $200 MSRP.
So even though the manufacturer sets a suggested price, the final price could be much different.
It's very possible. And it all depends on, the complex interplay of supply and demand and all these various costs that are being passed along the chain.
So as a consumer, you can't necessarily rely on that MSRP as a guarantee of what you'll actually pay.
It's a good starting point, but it's not the whole story.
Okay, so we've covered a lot of ground here, but there's one more important aspect of this that I want to touch on, and that's the impact on innovation.
Yeah, that's a really interesting angle.
The article raises the concern that this unstable economic environment created by tariffs could actually stifle investment in new product development.
And it makes sense. When companies are facing uncertainty about their costs and their supply chains and the future of, trade policy, well, they might be less likely to take big risks on new technologies.
They might be more inclined to play it safe.
Exactly. And the article also notes that a company's size and the diversity of their product line can influence their willingness to invest in innovation.
So a smaller company with a more limited range of products might be more cautious than a large company with a more diversified portfolio.
That's the idea. And if this trend continues, well, it could lead to fewer new products and a slower pace of innovation overall.
So we might end up with less choice as consumers.
It's a possibility. And it could also mean that the rollout of new technological standards might be delayed. The article mentions Wi-Fi 7 and PCIe 7.0 as examples.
Those are, the next generation of wireless and data transfer technology.
Right. And if companies are hesitant to invest in developing those technologies, well, it could be longer before we see them in our devices.
So tariffs could actually end up slowing down technological progress.
That's a real concern.
Wow, it's amazing to think about how all of these things are connected. Okay, so we've talked about a lot of really complex stuff today. But what does it all mean for the average consumer? The person who's just trying to figure out when to buy their next gadget.
Yeah, that's the million-dollar question.
The article has some advice about how to approach reading tech reviews in this new environment of unpredictable pricing.
Right. It acknowledges that most people don't, pore over every detail of a review.
We just want to know if the product is good or not.
Exactly. But with prices being so volatile now, it's more important than ever to really pay attention to the specifics of a review.
Like the actual performance of the product, the features, the user experience.
Right, because the MSRP that the reviewer might be using to evaluate the product, that might not be the price that you actually end up paying.
So you need to determine for yourself if the product is worth the price, regardless of what the MSRP says.
Exactly. You have to be a more informed consumer.
Okay, so to sum it all up, these tariffs are a really complex issue with far-reaching consequences for the tech world. We're looking at potential price increases, supply chain disruptions, a slower pace of innovation, and a lot of uncertainty about the future.
That's a lot to digest.
It really is. But hopefully this deep dive has given you a better understanding of what's going on and how it might affect you.
Yeah, knowledge is power.
Absolutely. And if you are thinking about buying some new tech in the near future, well, it might be that idea to do it sooner rather than later, before those prices potentially go up even higher.
It's probably a smart move.
So as you go about your day and you see those headlines about tariffs, keep in mind that this isn't just some abstract economic policy. This is something that could have a very real impact on your life and the technology that you use.
Something to watch closely.
Yeah. And here's a final thought to leave you with. How might these tariffs fundamentally reshape the global technology landscape in the long term? Could we see a shift away from China as the world's factory? And what kind of unforeseen consequences might arise from that shift, beyond just prices?
That's a really great question. And I think it's something that we're going to be grappling with for years to come.
It's a story that's still unfolding.